Hey everyone, welcome back to Corporate Decoder, the place where we try to find hidden gems and sometimes not so hidden coal chunks in the world of corporate finance. Today we are diving into what looks like a routine update from Bristol Squibb company, a company many of you know well, but sometimes the devil is in the details. So what exactly is Bristol Squibb telling us today? Well, on the 12th of January 2026, they released their current report on Form 8. Think of this as a quick update to keep investors in the loop about important events that might not fit neatly into their regular quarterly or annual reports. It's like a company's instant message to the market. And to kick things off, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these filings further together. The main event here seems to be the posting of an investor presentation, and this little report is essentially a heads up about that. They are telling us, hey, we put something new online for our investors. It's a way to make sure this information is publicly available and not just buried on their website. While the presentation itself is the star, we are looking at the filing that announces it. Now, looking at the information they provided about their stock, it's pretty standard. They list their common stock with a par value of $0.10. This is the basic building block of ownership in the company. And then they list a whole bunch of their debt, their notes, due at different times. We see notes due in 2033, 2033, 2035, 2038, 2045, and even as far out as 2055. This is a significant amount of debt. It tells us they are likely using borrowed money to fund their operations, research, and expansion. For a pharmaceutical giant like Bristol Squibb, that is not unusual, as developing new drugs is incredibly expensive and takes a very long time. Let's look at a couple of these debt instruments. For instance, their 1.75% notes due in 2035. This means they borrowed money at a 1.75% interest rate and have to pay it back by 2035. This is a pretty low interest rate, which suggests they have good credit and can borrow money cheaply. However, they also have other notes with higher interest rates, like the 4.581% notes due in 2055. That's a much higher cost of borrowing, especially for a company so far into the future. It shows they have a mix of debt, some taken on when interest rates were likely lower, and some more recently or perhaps under different market conditions. And then there are these Celgene contingent value rights. This is interesting. It points back to their acquisition of Celgene. These rights are essentially promises to pay additional money to Celgene's former shareholders if certain future milestones are met. This often happens in big mergers when the acquiring company isn't sure about the future success of the acquired assets. It's a way to bridge the valuation gap. The fact that they are still listed means these contingent payments are still a possibility, adding a layer of financial uncertainty to the company's future obligations. The company itself is incorporated in Delaware, which is a common place for large corporations to base themselves due to its favorable corporate laws. They also have a commission file number and an IRS employer identification number, which are just standard identifiers for regulatory purposes. Nothing too exciting there. They report their principal executive offices are in Princeton, New Jersey. So the core of this filing under item 7.01, which is Regulation FD disclosure, is to announce that investor presentation. Regulation FD, by the way, stands for Fair Disclosure. It's a rule that requires publicly traded companies to share important information with everyone at the same time, preventing anyone from getting an unfair advantage. By filing this 8K report, they are ensuring that everyone sees their announcement about the new presentation at once. What we don't see directly in this filing are the actual numbers from that investor presentation. This is just the announcement to get the juicy financial details. We'd have to go to the presentation itself, but the fact that they're releasing a new one suggests they have something significant to share, maybe about their progress on drug development, sales forecasts, or strategic shifts. Companies usually update these presentations when there are changes in their business outlook. Finally, at the end, we have the signatures. This is where the company officially signs off on the report. Amy Fallone, Senior Vice President and Corporate Secretary, is signing on behalf of Bristol Squibb Company. This just confirms that the report has been officially submitted and authorized by the company's leadership. Now, looking at this filing for Bristol Squibb, what is the story here? Well, for the most part, this is a very procedural document. They are telling the market about an investor presentation that they have posted. They are not releasing new detailed financials in this specific filing, but rather pointing to an external document. However, the debt structure they have listed does tell us something. Having a mix of notes with varying interest rates from 1.75% up to over 4.5% shows a company that has managed its debt over different economic cycles. The existence of Celgene contingent value rights is a reminder of past significant M&A activity and ongoing potential liabilities. What are the notable risks and opportunities for a company like Bristol Myers Squibb? The biggest opportunity is always innovation. Discovering and successfully bringing to market new blockbuster drugs can lead to massive revenue growth and profit. Their pipeline of drugs in development is key. On the flip side, risks are numerous. Drug development is incredibly expensive and many promising candidates fail in clinical trials. Patent expirations on existing drugs can lead to sharp drops in revenue once generic competitors enter the market. Regulatory hurdles and changing healthcare policies are also constant challenges. Competition is fierce, not just from other big pharma companies, but also from biotech startups. And of course, managing a large debt load requires careful financial planning, especially if interest rates were to rise significantly. In conclusion, this particular filing is more of a notification than a deep dive. It serves its regulatory purpose by flagging the investor presentation. For investors and analysts, the real work will be in dissecting that presentation to understand the company's current guidance and strategic direction. We know they are a massive player in the pharmaceutical world with a complex financial structure, including significant debt and contingent liabilities from past acquisitions. Their future success will hinge on their ability to innovate and navigate the challenging landscape of drug development and healthcare policy. Alright, that is our breakdown of Bristol Myers Squibb's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think their investment strategy is sound? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.